K-pop demon hunters Saja Boy's breakfast meal and Huntrix meal have just dropped at McDonald's. They're calling this a battle for the fans. What do you say to that, Rumi?
It's not a battle. So glad the Saja Boys could take breakfast and give our meal the rest of the day.
It is an honor to share.
No, it's our honor.
It is our larger honor.
No, really. Stop.
You can really feel the respect in this battle. Pick a meal to pick a side.
Ba-da-ba-ba-ba.
At participating McDonald's while supplies last.
With Sam's Club, you have the freedom to shop your own way. Curbside pickup, delivered to your doorstep, come in and grab it yourself. Yes, yes, yes. They've got plenty of options. Your call. Say yes to shopping the way you want. Join now at samsclub.com/yes and. You must be 18 years or older to purchase a membership, and membership is subject to qualifications. Visit samsclub.com/yes and for details.
Hey, Stackers. You know, on Monday, we talked about courage with Jen Drummond, an amazing story of climbing the second highest peaks around the world. But the focus really on you having the courage to go reach whatever those goals are that you've set for yourself. On Wednesday, we talked about retirement and travel, fusing the two of those ideas together in a fascinating discussion with George Georgi. And we're going to end our greatest hits week today with a little time travel. We're going way back to 2016. And before you hit, well, I don't want to hear 2016, you got to check this out. The name of the episode was called Investing in a Sky-High Stock Market, which 10 years later, at the time we thought that the stock market was really high. The SPY, we call it the Spider. It's an exchange traded fund that tracks the S&P 500, the 500 biggest stocks in America. You can buy that and just own a little piece, by the way, of all 500 stocks. A lot of people do that. Good choice for your large company stocks and your 401k if that meets your goals. But back then, I just did a little homework. It was trading at $190 a share if you were buying it. Today, it's trading just below $700 a share 10 years later. You would have bought it for $190. Today, $700. And by the way, I didn't even look at reinvesting dividends, what your actual return was. But from less than $200 to $700, that's a big reason why I wanted to play this. But you'll also hear us actually talk about a bunch of different headlines, so it was hard to name this show at the time. It's funny, I remember trying to name this because there are a few different fusion points that we baked into this particular episode. But what strikes me is that there's always something to worry about. This episode, as I listen to it, is so evergreen because we have the same fears then, 10 years ago, that we have today. And look at where we've been. We've had a pandemic. We had runaway inflation for a little while. We've had a stock market that's been on a tear, right? The last 10 years with a couple hiccups, but generally it's been a nice run. And for those of you who missed him when he was part of our roundtable discussions, by the way, Greg McFarlane was on this one. The guy Stackers either loved or hated, but I think mostly loved him for his gruff sense of humor. And what you might not know is when Greg had to leave the show, that's when OG joined the Friday crew. So if you've only been listening for a short period of time, that's a little history of Stacky Benjamins. By the way, if you're new here, usually during our 8-week run of shows, most of the time, OG and I and Doug, we'll dive into a topic or a headline on Monday. That's our Monday show, is a deeper dive into some personal finance headline and giving you tips to take based on the headline that are much more evergreen and will help you build a more robust financial plan. On Wednesdays, we'll interview one of the big names in personal finance or business, because if you're trying to stack Benjamins, you want to be great on the job. You want to be great off the job. We'll talk lifestyle design. We'll talk all kinds of things. So we've had the CEOs of Royal Caribbean, Coach, Cirque du Soleil, United Airlines, Honeywell, more on the show. But in the personal finance space, Susie Orman has been here, Ramit Sethi, David Bach, Jill Schlesinger, Gene Chatsky, Rachel Cruz, and many of the other great personal finance names, so that we can get the best outside advice for you and help you create a better financial plan for yourself. Those are our Mentor Wednesdays. And then on Friday, it's our chattiest show. It's this roundtable discussion between three bloggers, podcasters, media experts. These are people that I generally hang out with. I know these people very well. They're just friends that are very good at what they do and have some great chops, people that are well respected in the industry. And we take a headline, we take a topic, and you know what? Sometimes you'll hear how bad we mess stuff up, or you'll also hear how we think about these things just as people that are in the trenches working on a financial plan just like you are. So it's our chattiest show, and that's what we're doing today. But we're going back to 2016 when things were a little different, but as you'll hear, very, very much the same. Just two quick things before we start today's show. Our shiny new Boston group up and rolling. My daughter Autumn lives in Boston. She's already signed up for the group. James, Carol Ann, Susan, they have been planning this for months. And finally, it's time for the first meeting. It's going to be next Wednesday, March 11th, 6 p.m. at Hannah's Brewing. That's in Melrose. Come out and meet other like-minded individuals. Meet your people. They are going to have some fun. They're going to give some stuff away. It's going to be a really great time in Melrose, 6 p.m. The way to sign up and tell us that you're coming is stackingbenjamins.com/meetup. Of course, you can also join our Benjamins After Dark Facebook group for between the meetings to stay motivated and to help like-minded people who are in your backyard. So I love seeing our stackers get together across the country. And now, starting next week in Boston. All right. One meetup you don't want to attend is the meetup with the person who stole your credit. Well, I guess you would want to meet them and get your credit back, but let's try to make sure that doesn't happen in the first place. And the way we do that is with our tool called The Vault. It's alive. It's working for a bunch of our stackers. Not only does it protect your privacy, getting you off those email and text lists, but it monitors your credit, cuts your subscriptions, helps you bump up your credit score, create a better debt paydown strategy, and more. Cheryl and I use it in our weekly meeting. And what you've seen is that other tools do pieces of what The Vault does, but why have 7 different apps on your phone when you could just have one, and one that works with the credit bureaus, one that's built by some of the top developers in the land? stackingbenjamins.com/vault. If you go there, you'll see our YouTube, one of our walkthrough videos, so you can check out everything about it. Really a fantastic tool, and people saving a bunch of money. And even better than that, making sure that the bad people don't get to their identity. stackingbenjamins.com/vault. All right, we've got a couple sponsors that can help us keep on keeping on. We're going to hear from them, and then it's Friday, and Len Penzo, Paula Pant, and Greg McFarlane join me looking at how sky high the stock market is and a few other big headlines on this Friday. Coming back on Monday, we are going to have a fun week. One of our shows, Anna Allen back to answer your Stacking Benjamins questions. Can't wait to hear. By the way, if you want us to answer your question, stackingbenjamins.com/voicemail, and you can be on an upcoming show where Anna, OG, and I tackle your question. All right, let's hear from our sponsors and then roll into our Friday. You may not know that when we started Stacking Benjamins, it was a blog, and even then, just the startup cost, I remember thinking, is this the right thing? What if I write things and nobody comes, right? Well, luckily, that didn't end up happening. But starting something new isn't just hard. It's terrifying. There's so much work. You're not sure whether it's going to work out. You're not sure if anybody's going to read it. And then we change it to a podcast. Is anybody actually going to listen, right? What if nobody wants all the stuff that we have? Well, had I used Shopify, it would have been even easier, because with their expertise, their helpful tools, and their easy to use platform, that's something that would have made Stacking Benjamins more effective much, much more quickly. Shopify is the commerce platform behind millions of businesses around the world and 10% of all e-commerce in the U.S. Names you've heard of like Heinz and Mattel, Shopify, Gymshark, Aviator Nation, Allbirds, also all Shopify. Get started with your own design studio with hundreds of ready-to-use templates. Shopify helps you build a beautiful online store that matches your brand style. And best yet, Shopify is your commerce expert with world-class expertise in everything from managing inventory to international shipping to processing returns and beyond. And did I mention that iconic purple Shop Pay button? It's used by millions of businesses around the world. It's why Shopify has the best converting checkout on the planet. It also helps boost conversions, meaning less carts going abandoned and more sales for you. So you're stacking Benjamins much more quickly. Time to turn those what ifs into with Shopify today. Sign up for your $1 per month trial today at shopify.com/SB. Go to shopify.com/SB. That's shopify.com/SB. Spring cleaning's made its way to my closet. This time of year always makes me rethink exactly what's in my closet. Really want to keep fewer things, but I also want to keep better ones. I want to feel confident, and to feel confident, looking the part's a big piece of that. So I want pieces that are well made and that are easy to wear all the time. And that's why I keep coming back to Quince. The fabrics feel elevated. The fits are thoughtful. Pricing actually makes sense. As I'm swapping out and I'm cutting, the few additions I'm making all come from Quince. Quince makes high quality everyday essentials using premium materials like 100% European linen. They're insanely soft, flow knit activewear fabric. Their men's linen pants and shirts are lightweight. They're breathable. They're comfortable. Basically the perfect layer for spring. The pants strike the right balance between laid back and refined. If you saw the video of me on stage at Retire Meet, those pants are from Quince. It was really cool. I came off stage and Christine Benz from Morningstar getting ready to go on behind me and said, "Love your pants." Not generally. I absolutely love them. I think they make me look put together without trying too hard. And they're flow knit activewear, moisture wicking, anti-odor, soft enough that you'll actually want to wear it all day. The best part is their prices. This is important, stackers. They are 50 to 60% less than similar brands. How? Quince works directly with ethical factories, cuts out the middlemen, so you're paying for quality, not brand markup. Everything's designed to last and make getting dressed easy, which is another thing I think we all want. I love those pants that I wore on stage. It's the cashmere sweater that every time I wear it, Cheryl goes, "That is my favorite sweater on you." It looks great, feels great, and I don't have to have 50 things in my closet. So, like I am, refresh your wardrobe with Quince. Go to quince.com/SB for free shipping and 365-day returns. Now available in Canada, too. Go to QUINCE.com/SB for free shipping and 365-day returns. Quince.com/SB.
Hey everyone, I'm Pauline from the blog richfinancialindependence.com. And when I'm not spending all my money biking around Europe, I'm stacking Benjamins in Guatemala.
Live from Joe's mom's basement, it's the Stacking Benjamin Show. Hey there, money nerds. I'm Joe's mom's neighbor, Doug, and we're kicking off another glorious weekend in Texarkana with an epic roundtable discussion about, of all things, money. Joining us today from the classic site lenpenzo.com, Bruce Springsteen. Bruce! No, I'm sorry, it's not Bruce. He had to run. It's really just good old Len Penzo. And from Afford Anything, Paula Pant. Rounding out today's trio of greatness, the author of Control Your Cash, Greg McFarlane. Joe, when are we getting rid of this dude? And here he is, the guy who says he has a plan for this whole thing but won't show anybody, Joe Saul-Sehy.
Completely complimentary podcast coming your way. Hey, everybody. I'm Joe Saul-Sehy, Average Joe Money on Twitter. Can't believe that you don't have to pay for this, huh? The best things in life, as Mom said, are free. Hey, guess what? Got a fantastic show to finish out this 8-week segment of shows and can't wait to get to it. So let's get this party started, huh? All right, let's walk across the basement here and fire up my dad's shortwave again. And let's see who we get on the line. Let's start off in Los Angeles, California, where the man himself, Len Penzo, from that crazily titled lenpenzo.com blog, is at.
Joe, how are you?
I didn't know how to finish that sentence. Isn't that horrible?
Oh, that's okay.
That's
okay. Guess what? I've been busy. I've been studying for my dental exam, which is coming up in a few days.
Oh, that's rough. Isn't that
You know
rough?
what gets me is I'm one of those people that I can do anything I want in my teeth. I never get a cavity. I've never had a cavity in my life. They're good no matter what.
Yes, a guy who I think has a full set of teeth, definitely has a full head of hair in Las Vegas. It's Mr. Greg McFarlane from Control Your Cash.
And for the 39th episode in a row, Joe does not go to me first. So, Len, do you floss only on the day 3 or 4 days before you're cleaning, or starting 3 or 4 days and then every day until the cleaning?
About 3 or 4 days before the cleaning, unless I've had like corn on the cob or something somewhere in between the cleaning and the other cleaning. So, if I've had corn on the cob and there's something in there I just can't get out, then I'll floss just to get it out, just to get the stuff out. But just between the teeth where the stuff is.
Next time I see you in person, we're only shaking hands. We are not shaking.
Hey, I brush my teeth at least two times a day, sometimes more.
Greg, you just had the back of your throat floss today, didn't you?
Oh, man. I had my first endoscopy.
Congratulations.
Boy, this is a fun age to get to. For anybody out there who is hesitant of getting an endoscopy, if you've gone to your gastroenterologist and they recommend this and you put it off for 5 weeks in a cowardly fashion like I did, you don't have to. I didn't feel a thing. I literally did not feel a thing.
Fantastic.
And they said, don't operate any heavy machinery for 24 hours afterward. And a vehicle counts as heavy machinery. And I did not drive back, but I think I probably could. If I'm not on the show next week, you'll know why.
Right. And across town from you, I think we have Paula Pant from Afford Anything.
I am totally on the line.
What's happening, Paula?
Not a whole lot to report. I have not been to the dentist or the doctor in quite a while. So no horror stories to share there. No bleeding gums or anything else of that nature.
That's so good. This is a train wreck already. But the good news is, Paula, we got the band back together.
Where does that expression come from? Was there once a particular band that broke up and then got back together? And
you have no idea the expression, we're getting the band back together.
No, like I assume there was a band, I guess.
There was a band.
Got back together?
There was a band. Yes, there definitely was a band. Greg, we're getting the band back together.
To me, it's one of those expressions that I thought was just so time-tested it didn't even have an origin.
I thought it was the Blues Brothers. Wasn't the Blues Brothers that went around saying we're getting the band back together?
I think that's it.
I thought that's what it was. I thought we got Paula, but apparently I stumped the entire panel. That's
cool. I am not uniquely out of the loop.
She's like, woohoo. Yeah, all right. So why don't we just jump in, guys? Let's get to the fun stuff. Let's talk about money. Our first piece comes to us from Market Watch, and it's an opinion piece. It says, heed these 7 investing rules as U.S. stocks hit record highs. And Greg, I'm coming to you first with this piece from Lance Roberts. What do you think about this first rule? He says, sell losers fast and let winners run.
Typing "get the band back together" into Google auto-completes Blues Brothers, so there you go.
Bam.
Yep, it is. They even have clips on YouTube. I'm looking at it too.
How about that?
Didn't exist before 1980. Some of this advice, I think, is so basic it almost doesn't even count as observations. It's as natural as breathing. But sell losers fast, let winners run. Yeah, it makes sense in theory, but the tricky part and the reason why we're not all rich is because how do you define a loser? How do you define something that is permanently never going to return your investment as opposed to something that is just temporarily out of commission? How do you define a winner? How do you know that stock that's gone up 30% in the last month is still going to be worth holding on to a year from now? That's what I wondered. How do you define a loser, Greg? A change in management? If I'm seeing quarter after quarter of negative returns, if I'm seeing a company that is not making money and has no hope to, and doesn't have to rely on a cash infusion from the government, like I was going to say Tesla Motors would fit into that category, but it appears that regardless of who's in the White House, Elon Musk is going to enjoy an infusion until he eventually sells enough cars to turn a profit. But there are other, just off the top of my head, Faraday Future is another company that draws nominal revenue figures, tons and tons of expenses, huge losses. And I mean, that to me is the definition of a loser, something that I can't foresee any real world scenario in which a company's fortunes are ever going to turn around, regardless of the Faraday Future CEO, who, by the way, here's another red flag. The company doesn't even disclose his name. I'm not kidding. He could leave. You could bring in Warren Buffett. You could bring in Steve Ballmer. I think that company's beyond help. That to me is the definition of a loser.
What about a company like Amazon, which has always had good sales coming in the front door, but also really struggled to make a profit?
Well, if you ask its CEO, he'll say that it's never been about turning a profit since, when was it founded? 1994, 1995. It's about creating market share. And to the point now where they've dominated. I mean, you used to think of Walmart as the huge monopolistic retailer. Well, you don't really think that way anymore. Plus, Amazon has had some positive quarters, and it is duration. I mean, the company has succeeded for 22 years. It's not going anywhere.
Len, sell your losers fast, let winners run, like Greg says, sounds good. When you've got a loser investment, how do you define that?
This is a hard one because sometimes you'll think you have a loser. I don't know what the definition of loser is unless you're actually like looking at the bottom line and seeing like Greg said, there's returns or not. You know, it almost requires hindsight to meet up with this, because sometimes you would have sworn that if you were just looking at the returns, Amazon was going to be a big loser early on. And only now they've just started getting positive returns, maybe about the last year or so. But up until then, they were losing money constantly. So I don't know how you determine what a loser is. I guess if something is dropping continuously and you're holding it and it keeps losing money and it's not showing, if you're looking at the underlying fundamentals and you cannot justify sticking with that stock, I guess that's a loser. But it's really hard to, I mean, this kind of presupposes you know what a loser is in advance. It's almost unfair. This is an unfair term.
It just means that you have some criteria, like Greg's talking about. You've got some criteria that defines what a loser is, right?
Well, yeah, to me, so now we're going back to the old exit. So here's what I do when I buy an individual stock. I have an exit strategy, and I don't mean to sound like a broken record, but if you have an exit strategy, these things are easy to define, right? So I'm going to buy stock X, and if it drops 15% or 10%, I'm going to sell it no matter what. And if it makes 20% or 50%, I'm going to sell it no matter what. If you have that exit strategy when you buy the stock ahead of time, this kind of sell losers, let winners, that's how you would define it. That's my best answer.
Paul, if you had an exit strategy, you would have been off this podcast a long time ago, I'm sure.
I know, right? If I had an exit strategy, I would be like...
It's like, what the heck?
I would have dropped this puppy like a hot potato.
What am I doing here? Right. What's your exit strategy with individual stocks and selling your losers fast?
I don't really have one. And I mean, partially that's because I don't really play the individual stock game. As we talked about in one of the last podcasts, I have 2 individual stocks that I hold, both of which are like a tiny, tiny portion of my portfolio. Joe, you and I told you earlier today that I consider that money that I could otherwise throw into a dumpster fire.
Right.
I really don't play the individual stock game enough to have an exit strategy. What I would say is twofold. Number one, if I'm buying an individual stock, it's because I believe in its long-term viability. I'm a big fan of that quote from Philip Fisher, who said, the best holding period is forever. So if I buy an individual stock, it's with the same mindset that I have when I buy an index fund, which is barring any type of substantial change in the company's activities, like a change in the market, a change in the industry, barring some kind of actual real change. If I'm buying a company, it's because I want to be a part owner of that company, not just a trader.
Does this same, quote, sell losers fast, let winners run apply if you have a portfolio of real estate?
Oh, God, real estate, I would be even more reluctant to sell because there's such high transaction costs. You know, you can sell a stock fee-free on certain platforms. With real estate, every time, I mean, from the moment you buy a house to the moment you sell it, that house has to appreciate 6% plus inflation just for you to break even on the commissions, not to mention all of the other trading costs. So real estate is something you definitely want to consider an illiquid asset and not trade often, unless you're in the business of flipping, but then that's a completely different business altogether. That's
right.
It's a different model.
Greg, buy cheap and sell expensive is his next piece of advice. I guess this is he talking about the PE ratio?
I think so, but then when you actually get into the meat of it, he says, however, you will pay any price for a stock because someone on television told you to, whether it's Jim Cramer or somebody screaming at you from Fox Business or CNBC or whatever. I don't necessarily agree with that. I don't think that just because somebody is touting something that it really makes an appreciable difference to the number of people going into the market and purchasing said stock.
Well, we've seen the Cramer effect, though. I mean, he in particular does affect the price of a stock.
Still, though? This many years in?
Yeah, no, you're right. You're right. Probably not as much now as you see. That's true. But that actually brings up another point, Greg. Point number 5 on here is turn off the television. How much do you look to people on TV when you're looking for your next potential purchase?
Well, I say this over and over again. I mean, I usually keep Fox Business on during the day just to have another voice in the house, whether it's disembodied or whatever. Yeah. And routinely, I mean, when Liz Clayman after the closing bell, and she'll say, the market was down 0.13% today, and that's the opening story. That is the most important thing that happened in the market at large, is that it lost 1/800th of its value, which it's probably going to regain most of the following day. So, yeah, if you're looking at broadcast television to tell you the inner workings of the think about it. I mean, that's cable channels that are available to millions of other people. You're not going to find any hot tips there because it's already passed through other sets of hands and is hitting everybody at the same time. If it's for entertainment purposes, that's great, but there's absolutely no reason to pay attention to the movements in the market for more than monthly if you're trying to gauge anything without driving yourself crazy.
Yeah, number 7 on here is go against the herd, and I hear what you're saying. It's hard to go against the herd when you're listening to the place that everybody else is listening to. Number 3 on here, Len, I really appreciate. This time is never different, he says. As much as our emotions and psychological makeup want to always hope and pray for the best, this time is never different than the past. Do you agree with that? Because you seem to be a guy who thinks that there's another shoe that's about to drop that maybe hasn't dropped in a long, long time.
Well, yeah, and that's an example of this time is never different. There's been lots of shoes that have dropped over the past, what? I mean, you just go back. I'll only go back to 1987. You had a big crash in 87, right? And then you had a big run up to the dot-com bubble in, 1999, 2000. And then we had another, stocks fell and things ran up again until 2007, 2008. There was another drop. So things go in cycles. Nothing ever changes. That's just the way it is. And irrational exuberance, you'll have a lot of people trying to justify that, no, this time is different, but it's really not. Things go in cycles. That's how it is. All the way back from the beginning of time. That's how things are. Can I bring up one thing that's not on here that I'm surprised this guy did not put on here for stock market? Don't fight the trend. Don't fight the trend, which is I've been famous for doing now for the past 5 years, and it's killed me. Right. Seriously. But that is one of the biggest stock market investing tips there is. If something's going up long term, you look at the trend and you tend to stick with that until it turns. That's usually pretty good advice. Unfortunately, I haven't followed it, but.
Well, it's funny you say that, and I want to go back to you, Greg, because of the 3 people on this panel do more individual stock investing. When he says don't fight the trend, Len says that you're looking at what we call a top-down strategy, right? Where you look at the overall trend and then look at stocks that fit that versus a bottom-up where you find a stock that you like and then you make sure that the trend is agreeing with this particular stock and that this stock doesn't have to be a salmon. Which way do you invest? Do you start off with a trend like you like, water or you like wrestling or whatever it might be? Or do you start off with a stock and then work backwards?
You say I like wrestling. You make it sound like I have posters of Goldust and the Undertaker on my wall like a 12-year-old. I am a casual fan. I went to WrestleMania a couple of years ago with my girlfriend, and she was upset that I was not wearing a WWE T-shirt.
Was she really?
Wearing some plain solid color.
Really?
She's like, yeah.
Wow.
I've been to one too. I've bought tickets to see those. They're fun. They're so fun.
Okay, I should have said cats.
All right, fine. Top down. I don't think, hey, this is the new hot sector. Let's dig a little deeper into it. It's really more a case of just plowing through financial statements, which is not a lot of fun. It's tedious unless you have a particular desire for it. And I have to admit that I don't. To me, it's more of an eat your vegetables kind of thing, but the reward is there.
Yeah.
And I have to hit on the author for this time is never different. Well, maybe it is. I mean, yeah, 1999, 2000, back when Paula was learning to walk, that time was plenty different. As Len pointed out, Pets.com was trading at thousands of times earnings, and a bubble like that might not be historically unique in the sense of it'll happen once ever, but it's infrequent enough that it'll happen only 3 or 4 times in a person's investing lifetime, as will the nadir that we saw in the stock market of 2009, 2010, when everything is underpriced.
That's an interesting point, and I think we're going to leave it right there. And we're going to move on to a piece in Kiplinger that I found interesting. This is a banking piece by Lisa Gerstner that says 6 things you need to know about paying with cash. And I'm really, guys, I'm not that interested in the points in the article. My main thing was more just about paying with cash. Paula, do you pay with cash?
Almost never.
How come?
I like, number 1, being able to get the rewards, mostly frequent flyer miles that come through my credit card. Number 2, I like being able to have a third party who can be the intermediary if there are any disputes that I have with the merchant in terms of the product or the service, or, if there's any type of merchant dispute. And number 3, I don't like carrying large sums of cash around, or really any sums of cash around above like $20, because I'm more likely to lose cash. If I lose my wallet, I can cancel the credit cards. The cash is gone.
You're saying the risk of cash is far greater than the reward.
Exactly.
Yeah. Len, you pay cash or just gold bullion?
Well, I pay cash for. This might sound strange, but if I'm doing business with somebody who I don't really trust, because it's happened before, or I've given a credit card to somebody and they've taken my credit card number and used it for their own, gain. So if I don't trust the person I'm dealing with to that regard, I will use cash. I keep cash around always for tips. Nothing worse than not having money to tip somebody for whatever reason. But no, I'm like Paula. Generally speaking, I use the credit cards because the rewards are so great. You can't beat it.
But it's weird. If you don't trust somebody, it seems like you'd be more likely to use credit. I mean, I hear what you're saying about them stealing your credit.
Let me give you an example. Pizza. Okay? Pizza. There are some pizza places, they will take your credit card, right over the phone or what have you. And I'm not willing to do that for a lot of places. I'd rather say, nope, have the guy come to my door and I'll pay him cash. So I'm not saying that's always, but that's the first example that comes right off the top of my head.
Interesting. Greg, how about you? Cash or credit?
I pay with cash as little as possible. I will buy a magazine with a credit card. If the retailer wants to pay a service fee while I earn another couple of Hilton Honors points, that's fine by me. I'm amazed that 40% of transactions are still via cash.
Yeah, me too.
The underground giant panda market is bigger than I expected. Granted, that's from a year and a half ago, this article, but still, I prefer, like Paula said, having the credit card companies list and itemize my purchases, something I couldn't be bothered to do if I used cash for everything. 2 exceptions, 2 places where I will pay cash. Number 1, if I am traveling in a third world country, I've had a credit card number stolen once, never again. And depending how far into the hinterlands you go, you'll find countries where American dollars are pretty much accepted as legal tender, which is kind of convenient for living in this country. The other exception, I will carry cash on hand when I'm going out to dinner with a large group of people. This is a variation on what Len said about tips. I don't drink alcohol, and I'm not going to order an appetizer for the most part, not because I'm cheap, just because that's the caloric intake that I need. And if I'm going to dinner with 10 other people and the bill comes out and they expect me to pay exactly 1/10 of it, when in reality I contributed more like 5% to the total cost, then I'm more than happy to just whip out cash. People think that it's somehow tactless, and I've never understood why this is, to calculate, all right, I paid $18.95 for my entree, $3 for my drink, that's $21.95. Let's put a 20% tip on that. That's $4.40. So now we're looking at about $26.50. And then to pull out $26.50 in cash, put it in the middle of the table and say, hey, I'm done. You guys figure it out.
I don't think that's tactless, and I have been in groups where people seem to, frown upon that. Paula, what do you think of that?
I totally agree with what both Len and Greg said. I do carry cash around for tips. In fact, this one time I went to the bank, and because I like to have a bunch of 1s and 5s on me for the sake of tipping, especially because there's a lot of times when you need to tip somebody like a valet $2, So I go to the bank, and I ask the teller, I was like, hey, can I have $100 worth of 1s? And he just looks at me and he's like, strip club?
Really?
Yeah.
That's classic. That's awesome. But what about splitting the bill? What about splitting, Greg said, hey, I figure out my part and I put my $26.50 down. Instead of splitting it evenly, I'm just, does that sound tactless to you?
No, if it's just myself and one or two other friends, if it's a small group, I'll just throw down a credit card. If it's a large group, I'll usually pay in cash just so the server doesn't have to run 8 different cards.
Yeah.
I figure it'll just be easier for them. So I calculate my percentage. I won't calculate it down to the penny, but if it's $26.50, I might round up to 30, throw that in there, and then let them figure out the rest.
I was starting with the assumption that the 9 other people at the party and myself are not all asking for separate checks.
Right.
To me, that is tactlessness.
Mm-hmm.
If I was at a table where somebody said that, separate checks for everyone, please, I would look at the server and say, I completely apologize. That came out of someone else's mouth, not mine.
Yeah, but you know how sometimes the server will give you one check and then the table hands back like, here are 8 cards. Could you please put $4 on this one, $6 on this one? So it's one check, but the table tries to pay with like an entire catalog full of cards.
Right.
Yeah, and I think this is where the customer is always right, reaches its logical conclusion. And at that point, the server or the manager needs to put their foot down and said, all right, give me one card. And then the next time you people go out together, go to the next person in line, figure it out yourselves.
I want to ask one more question about cash here, which is, we don't deal in conspiracy theories here, but let's do it now. There's this idea that we've seen a little bit in Europe around cashless societies and also negative interest rates. And Paula, I think we'll stick with you here. Have you seen this?
I am not really familiar with this.
Okay, so banks having negative interest rates, meaning governments want you to take your money out and spend it to keep the economy moving, right? Don't keep so much money in the bank. However, if we have a cashless society, you don't have the option of just putting it in, Len Penzo's bunker. You have to either spend the money or pay a bank, one or the other. And I keep hearing this conspiracy theory that as we go toward a cashless society, we're all kind of handcuffed to the system that we might not want to be a part of. Haven't heard anything of that.
I've heard people bounce around the phrase cashless society, but I thought that they were simply referring to the fact that we tend to use debit cards and credit cards more, and we make payments electronically.
No, I'm talking about
I didn't realize that people literally meant some type of conspiracy theory. That sounds a little wacky to me.
Well, no, not conspiracy theory. We talk about cashless society. We talk about completely getting rid of cash and governments completely getting rid. Len, have you heard about this?
Absolutely. And a cashless society is a banker's dream. Why do bankers want a cashless society? They want a cashless society because a cashless society will prevent bank runs. If you get rid of all cash, banks will never have to ever worry about a bank run because they can close your account instantaneously and stop you from pulling. It's the ultimate in capital controls. So yes, a cashless society is very dangerous, and you probably knew I was going to say that, but yeah, that's what all banks want. And by the way, we have negative interest rates here in America. Remember, negative real interest rates, which is the nominal interest rate minus the inflation rate.
Sure.
We already have negative real interest rates here in America, whereas in Europe, they actually have nominal negative, and then it's even worse with the inflation.
Yeah, and nominal is what I'm talking about. If you combine cashless society with nominal negative interest rates, we've got yum for the bank, I think. Greg, have you heard of this?
Yes, and I think it's a sky is falling kind of thing. As long as politicians hire prostitutes, we will never, ever have a cashless society.
I think that's a great place to leave that one. Greg gets the last word on 2 of them in a row. Nice work. Dell PCs with Intel Inside are built for the moments you plan and the ones you don't. They're for those all-night study sessions, the moment you're working from a cafe and realize every outlet's taken, the times you're deep in your flow and can't be interrupted by an auto update. That's why Dell builds tech that adapts to you. Built with long-lasting batteries so you're not scrambling for an outlet, and built-in intelligence that makes updates around your schedule, not in the middle of it. Find technology built for the way you work at Dell.com/Dell PCs. Built for you.
Insurance isn't one size fits all. That's why drivers have enjoyed Progressive's Name Your Price tool for years now. With the Name Your Price tool, you tell them what you want to pay, and they'll show you options that fit your budget. So whether you're picking out your first policy or just looking for something that works better for you and your family, they make it easy to see your options. Visit Progressive.com. Find a rate that works for you with the Name Your Price tool. Progressive Casualty Insurance Company and Affiliates. Price and coverage match limited by state law.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Let's move on to our third piece, which comes to us from RFDTV.com. Here's something. This is written by Andrew Hauser. Answers to kids' tough money questions. And I don't really care what they say. I want to ask you guys these tough money questions, all right? So, Len, let's start with you. Kid asks you, how much money do you make? What do you tell your kid?
I tell my kid how much money I make.
Do you really?
I certainly do. Yeah, my kids know how much I make.
So,
absolutely.
So do you think that the kid really wants to know exactly? I mean, and don't you worry about the kid going to school and just telling all their friends? My dad.
I really don't care. I've never understood the stigma of people knowing how much you make. If you choose, to me, it's not a big deal. It's your income's your income. So to me, it's more, the only reason you might want to be embarrassed about it is if you're living beyond your means, and then people can say, oh, you only make this much, but you're living like a king. Now that'd be something to be embarrassed about. But, if you live below your means, heck, I don't know what the stigma is. So, and I've tried to teach that to my kids. It's just a number. The real thing is, do you stay living within your means? And the actual number you make, it doesn't matter.
Paula, kid asks you how much money you make. You're probably not giving him the exact number.
Well, I mean, again, I'm speaking only in hypotheticals because I don't have any children, but if I was worried that the kid if I lived in, say, a small town where a lot of people knew me, and I was worried that the kid would blab about it and all of a sudden the whole neighborhood knows, that would be my reason for wanting to not reveal a number. It wouldn't be for the sake of protecting the kid. It would just be for the sake of not letting that number get out generally.
But to Len's point, why does it matter? Why does it matter that it gets out? Because
people often treat you differently depending on the ideas and assumptions that they hold about a person with a given amount of money. So if a person finds out that you have a lot of money, they might, for example, start expecting you to pick up the tab when you go out places, or maybe they'll ask you for a loan, or maybe, it changes the dynamic of the relationship a little bit. For close relationships, sure, I'm fine with letting close friends and family. No, actually, screw the family. Just close friends. I'm fine with letting them know my net worth, but I don't want casual acquaintances knowing that, because that can interfere with our dynamic, our social dynamic.
Yeah. Greg, do you let them know or not?
First of all, by the way, if you have a broad enough cable or satellite package, RFD-TV is fantastic. Crop reports, shows about poultry, all in 480p with minimal production values. I'm serious. It's a great network.
480p.
But if I had kids, a gigantic, overwhelming I would probably understate, yes, I would lie to my children by a few percentage points, just knowing full well that the kids would share this with their friends at school, or more likely the teachers would overhear it. And yeah, I wouldn't need the headache. I would be glad to trade honesty for a quieter life.
You'd increase that number then, but you say 2 or 3%. You really mean like 50, don't you? You give the kids some huge number that they tell their teacher?
Absolutely not. I would go in the opposite direction. I would lowball it. I would rather have people thinking I'm poor than thinking I'm rich.
I like the other one. My dad, Greg, he's a bajillionaire.
Hey, and remember, whatever the kids say at school, it's all hearsay. Nobody knows for sure. I mean, you're being truthful to your kids, but nobody knows what your kids, if they're telling the truth or what anyways, right?
How about this question? Why can Emma's family afford to go on vacation, but Paula, we can't?
That's a tough one to answer. But what I would say is that people spend based on their priorities. So it might be that Emma's family prioritizes going on on vacation, but we have different priorities and we've decided to put our money there. So that way it doesn't sound like scarcity or lack. It sounds like a conscious decision that you've decided that you value X more than you value Y.
Oh, Len, I bet you would do what Paula did, but you probably changed it to be this way. Because this is what I do, Len. I'd say, well, Emma's family, they value vacations, and we value actually having some money.
Yeah, well, that's the first thing I would give a series of answers. There's lots of answers to this question, right? One of the answers is, hey, maybe Emma's family just has more money than we do. Or two, like you said, maybe they value vacations more than we value other things. And I would point out other things that we have purchased in lieu of the vacation being the opportunity cost of buying for something else that we went for. So, or it could just be that, hey, we're saving for a vacation, but we don't have enough money yet for that vacation. We're gonna have to wait one more year. It's like that one of these days,
Yeah, I was being passive aggressive, by the way. There's no way I'd say that. That's because Emma's family's losers and they spend every dime they make. That's why I kid.
Oh, and you could say this. You could say, hey, who says they could afford it? Maybe they're putting this all on the credit card. Seriously.
Yeah, but I wouldn't say that because my kid's going to go back to school
I
and
wouldn't
says,
either.
Yeah,
I wouldn't either.
Yeah, my dad says your dad probably can't afford it. That'd be horrible.
Yeah. Oh, my God. Yes.
Yeah. Let's see if we can get Greg back in on this one. Greg, why can't we just buy that now?
God, again, this is just yet another reason why I could not be a parent. I would just say, change the subject, or I guess I couldn't smack them for something like that. But I wish I had a definitive answer for that. No, I guess I could explain to them the concept of economics. I mean, there's scarcity. It's like Paula says, it's not afford everything, it's afford anything. Even, again, for the second time he comes up in the conversation today, but I assume that Warren Buffett told his kids there's a limit to what I can indulge you with. And yeah, my limit is going to be less than Warren Buffett's. And you can keep asking why and tugging at my shoulder and complaining or making puppy dog eyes. It's still not going to happen. And this is why I had a vasectomy.
That's what I was going to say. This whole article is birth control for you, isn't it, Greg?
Oh, my God. Yes. This or a trip to Disneyland. Take your pick.
Len, your kids must have said this before. Why can't we just buy this now? They must have thrown a tantrum or two.
Oh, my God. If there's a kid out there who has not said that, I mean, you got to be kidding. I tell you what, when they say that, I just say because it's either because we don't have the money or you don't have the money. What is this we? So if it's something more personal to them, it's because you don't have the money. If it's something bigger like a vacation, I'll usually say because we don't have the money or we have other priorities. It's really not hard. You just have to put your foot down and not waver and not cave in.
Paula, I'm going to go to you for this last one. You tell your hypothetical child that you don't have any money and they say, well, why can't you just use the credit card?
I actually heard a kid say something similar where the mom said, oh, we don't have any money. And the kid said, well, why don't you just go to that machine and get some, in reference to the ATM? That was a cool question, actually, because it gave her the opportunity to talk about where that money actually comes from. That money doesn't come from a plastic card, nor does it come from a machine. She gets to explain the invisible process behind that leads to the demonstration of the card or the machine. So I thought that was really cool. Basically, it was just an opening segue into mommy, where does money come from? Essentially, sort of a question.
Are you saying that you listened to a mother give the money, birds, and bees talk to her kid?
I did, yeah. Yeah, it was a family friend. So I was there. I was at her house, and we were all sitting around the dining table when this happened.
When an ATM machine and a dollar love each other very much.
Exactly.
Yeah, right. But how do you fit the $2 fee into that analogy? The ATM fee. Is that the creepy part of the story? I don't know.
I think that goes back to Greg's comment about how as long as politicians are buying prostitutes.
Right, exactly. All right, I think that's a great place to end this. Mr. McFarlane, where can people get that awesome book, Control Your Cash?
Well, they could ask Len Penzo, but I'm sure he's not going to give up his copy. So they can buy it at Amazon.com. They can download the Kindle edition. If you don't have a Kindle, buy a Kindle already. They're like $60 for $7. Or you can get a hard copy. And as you pointed out to me the other day, the hard copies run for about, I think it's upwards of $500. And those are ones I haven't even autographed. Yes, paperback from right now, used from $448.28. There was one person selling one new for $999.83.
I'm going on Amazon right now. I'm going to put my copy up for $10,000, Greg.
That is from a seller with a 96% positive rating on thousands of transactions.
Your book has become a collector's item. That's what you're saying.
Apparently, yeah. They can't download copies of it fast enough.
That is fantastic. Mr. Penzo, what's happening at lenpenzo.com?
Hey, on lenpenzo.com, I share the story of what happens when you can't pay the restaurant bill. It's a true story where it was time to pay my bill and I didn't have my money.
So is this a Dine and Dash story?
No. Well, I was considering it.
Oh man, I can't wait to read that one. That's fantastic. Paula Pant, what's going on at Afford Anything?
On the Afford Anything podcast, we have an interview with Jenny Blake. She is the author of the book Pivot, as well as the author of Life After College. And she talks about what to do if you want a career change. You're not happy with the job that you've got. You want to go somewhere else. You want to do something different. How do you facilitate that transition? And we also have an Ask Paula episode where we chat about all kinds of questions that the listeners submitted. So tune into the Afford Anything podcast for that.
Awesome. We'll have links to all that phenomenal stuff in our show notes at stackingbenjamins.com. Guys, thanks for playing.
Thank you.
Thank you.
Oh, that's going to do it for this week. And guess what? It's also going to do it for this 8 weeks of shows. For those of you new to the podcast, we take a break after every 8 weeks. What we found was before we started taking a break, we would find ourselves posting shows later. The guests weren't as good anymore. And we like having a fresh show with guests that surprise you and are new and are fun and are ideas that you might not have thought of. And we really think a lot about that topic. All right. Go stack some Benjamins, everybody. Bye-bye.
Paula Pant appears courtesy of AffordAnything.com. Greg McFarlane appears courtesy of Control Your Cash. And special thanks to Len Penzo from LenPenzo.com. This show was created by Joe Saul-Sehy, produced by Richie Rutter-Reese, and engineered by the amazing Steve Stewart. Kathleen Selmans handles design, newsletter, and classroom opportunities. If you'd like to learn more, head to stackingbenjamins.com/classes. Online, visit us on Twitter at @SBenjaminsCast or on our Facebook page. Shannon Cowan is our community manager and social media guru. I'm Joe's mom's neighbor, Doug, and I'm pretty much the guy in charge of everything around here. Trust me, this well-oiled machine didn't get like this all by itself. SB Podcasts may receive payment on the show from sponsors and guests in the form of books, giveaway items, discounts, or other remuneration. There's no way you would take advice from these dorks, but like Joe's mom always says, don't take advice from people you don't know. This show is for entertainment purposes only, and before making any financial moves, consult with a real financial advisor.
Oh my God, was that fun? Greg, thanks a ton.
Thank you. I got to run.
Yep, see ya.
Bye.
He actually said goodbye this time.
Yeah.
What's
up
with that?
Yeah,
What the hell's going on there?